Palantir and Oracle have been benefiting from the increasing spending on artificial intelligence. Palantir helps businesses and institutions harness proprietary data to improve performance. Oracle helps build data centers optimized for AI. Understandably, these are two AI stocks getting attention from investors because of their role in the AI ecosystem. Institutions and enterprises will increase their spending on artificial intelligence by hundreds of billions of dollars over the next several years, and the investments are likely to continue for several decades beyond that. But which one of these is the better AI stock to buy at current valuations? I'll answer that question in this video, comparing these two AI stocks on revenue growth, on profit margins, on cash flow margins, return on invested capital, balance sheet strength, and finally, valuation to determine which one I think is the better AI stock to buy for long-term investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, let's start with revenue growth. And what I have here is a chart of quarterly year-over-year revenue growth for both Palantir and Oracle going back to 2020. This measures how much each of these companies grew revenue in a specific quarter compared to the same quarter the prior year. And we'll notice a couple of things here. First, Palantir had been on a long trend line of decelerating revenue growth, which has turned around. You can see here that revenue growth was well above 40% in 2021, but that had fallen all the way down below 20% in mid-2023 before the company re-accelerated revenue growth here in mid-2023 and for the first half of 2024, accelerating it back to 27% quarterly growth. The main reason Palantir's been able to do that is because it's made itself more attractive to enterprises. It has long been very attractive to government and government institutions because they have deeper pockets and they can afford to pay its premium prices. Now, though, Palantir has found a way to get businesses to purchase its products as well, and that strategy of going into businesses, demonstrating what they can do, has worked well for Palantir. Oracle, meanwhile, is also accelerating revenue growth, but much slower than Palantir. Oracle's revenue growth of 7% in the latest quarter was an increase from the quarter before that, and management said that revenue growth is likely to continue moving higher over the next couple of years. If you look at Oracle's orders, customer orders, those have been soaring in recent quarters. Those orders eventually turn into revenue when Oracle delivers whatever was contracted, but for now, they haven't yet delivered on those contracts, and so revenue growth has yet to accelerate. But if you've been looking at the orders, if you've been looking at my videos on Oracle, you'll know that the company's revenue growth is poised to accelerate in the coming quarters and years. The next thing I wanted to compare these two on is profit margin, operating profit margin to be specific. Oracle generates a healthy operating profit margin of 31%. In fact, that's very strong. Palantir is about a third of that at close to 12%. But the trend favors Palantir. Palantir has been improving its operating margin significantly, while Oracle has been flat to declining slightly in the previous several years. Palantir's profit margins might slow down a bit because management said they're going to hire more people because they've found success in developing their product for businesses. And so they need more people to fulfill those orders. They see strong demand for that strategy. They're going to try and deploy that strategy on a broader scale. And so they're hiring to meet those customer needs. Now, if revenue growth continues accelerating, then profit margins will continue accelerating as well, but maybe not at the pace they've been able to deliver over the last several years. Cash flow from operations to sales is a similar story, but it favors Palantir much more. Oracle, same, right? Better cash flow from operations to sales, but the trend line has been flat to declining. Palantir, slightly worse cash flow from operations to sales at 28%, but the trend has been significantly improving. Similar to what I said about the operating profit margin, I would expect here in cash flow from operations to sales. Palantir, the big difference on why its profit margin is lower than its cash flow is because the company uses significant amounts of stock-based compensation, which is a non-cash expense, which the company then causes shareholders to be diluted. And so that's a bit of a downside of using stock-based compensation, is that you dilute shareholders, but at the same time you increase cash flow because you're paying out employees in stock, and that's not cash leaving the company. And so it's pros and cons. It has its benefits and it has its downsides when you use stock-based compensation. Palantir employs a lot of stock-based compensation as a percentage of total compensation. Now, if you look at return on invested capital, they are much closer at 11%. Again, with Palantir improving significantly and Oracle being flat to declining in this metric. Return on invested capital of 11% is not great. You would like to see a return on invested capital that's higher than a company's weighted average cost of capital. And for most companies, a weighted average cost of capital, especially tech companies, it's going to be above 10% as a general rule of thumb. So having a return on invested capital close to that is not ideal. You'd like to have greater separation between those. And so Palantir is doing great at improving this metric. Oracle, I'd like to see improvement here. I'd like to see these new orders that are going to turn into revenue. I'd like to see that develop into better profit margin, better cash flow, and better return on invested capital. Now on the balance sheet, Palantir is in much better shape. What I have here is the net long-term debt. So this is this is long-term debt minus cash. Long-term debt minus cash. And Oracle at $73 billion means it has $73 billion more in long-term debt than it has in cash. Palantir at negative $4 billion means it has $4 billion more in cash than it does debt. In fact, Palantir has zero long-term debt and it has $4 billion in cash. Palantir's balance sheet is absolutely pristine and in much better shape than Oracle's balance sheet. So in most of these metrics that we looked at, Palantir demonstrated better performance on revenue growth, on profit margin, on cash flow from operations, on return on invested capital. While the levels may have been in favor of Oracle, Palantir's demonstrated better trend improvement over recent years. And Palantir's balance sheet is in much better shape than Oracle's. If these two stocks were selling at the same price, then Palantir would be my choice. It would be a no-brainer. But they're not selling at the same price. Palantir stock is more than 3 times, almost 4 times as expensive as Oracle stock. Palantir is trading at a forward price to earnings of 84. That's a very expensive valuation. Oracle, meanwhile, is trading at a forward price to earnings of 23, a much more favorable valuation. So I do think Palantir deserves a premium over Oracle, but I think this much is too much. And so because of the valuation, if I had to pick one of these two AI stocks to buy today, I would pick Oracle as the better AI stock because of valuation. Palantir is performing better. It's the better business overall from the trend lines and from performance. But if I look at valuation and I try to judge if it's earned this much of a premium valuation, I would say no, not yet. And I would pick Oracle over Palantir today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.